What have you seen with the stock? What do you expect? What does history tell us happens next?
Good morning, Becky. So you're right. Apple has this unseasonally canny trading pattern whereby it typically outperforms in advance of iPhone announcements. And we've seen that again this year. In the last 3 months, stock has outperformed by about 11%, 15 out of the last 16 years in the 3 months before an iPhone announcement. The stock has outperformed during that period by an average of almost 15%. So it's really amazing that we have this seasonal trading pattern, which is anticipatory. It's also coincides with a period where there's likely not going to be much surprise in Apple's results. And typically what happens in the 3 months after the iPhone announcement is the stock doesn't do very much. Investors are waiting to see the strength of the cycle, which we typically only know in December or perhaps January.
All right, that being said, we know there's going to be a new iPhone 14. That's the expectation today. What do you think in terms of what you'll be listening for most closely? What would move the needle for you?
Well, I think one of the big questions is price, and Apple will be essentially announcing upgraded versions of the existing models. They will be replacing the iPhone mini with an iPhone Max, not a Pro version of the Max, just a base iPhone 14 Max. But the real question, I think, is pricing. It is an inflationary environment. Some of Apple's suppliers have talked about price increases. And so the expectation is that Apple might raise base price on units about $100 and cascade those through the various storage offerings that Apple offers with the iPhone. And that's the big question, Becky, is what might demand elasticity be for the iPhone in the face of increasing prices? What might it be in the face of a potentially weakening consumer? And what might it be on the back of 2 very strong years for iPhone?
What's your bet?
We're actually a bit more cautious. To give you some perspective, in fiscal year 19 and 20, Apple sold less than 200 million iPhones. In the last 2 years, it sold more than 230 million iPhones. And we think part of that is because consumers were not going out and were largely at home, and employment was good. There were stimulus checks, et cetera. And we feel that many of those things are reversing, and the comparison is very difficult. So I think it may be more difficult for Apple to eclipse over the next year 230 million phones or 240 million phones, which is what they've seen the last 2 years.
Forget about just raw numbers. What about the profitability on those phones? If they do raise prices, would that make up for it?
It certainly could. There are lots of cross currents. I mean, typically Apple puts a lot more content in each new phone. So in 2015, the average price of a phone was under $600. Today, it's about $840, and yet the profitability or gross margins of those phones have gone down. And so the consumer ultimately wins. We're getting faster processors, richer cameras, better software integration and functionality, better connectivity. And so a price increase doesn't necessarily lead to higher margins. I think the other really important question is, what's the mix of iPhones going to be? The iPhone Max and Pro Max in particular are much more profitable units for Apple, because not only is the base model more profitable, but typically an affluent consumer who's buying a Pro or Pro Max is also buying more storage. And that storage has about 80% margin for Apple. And so there's a big question, particularly in this economic environment, whether you're still going to have the same rich mix of higher end Apple iPhones, i.e. the Pros and Pro Maxes.